Today on the CEO Barbecue, we're going to Western Mexico to look at an in-production small-scale gold mine, which is being operated by DynaResources. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Dyna is listed as Dynar, so that's DYNR. And they only list on OTCQX, actually, where over the last 3 months, the average volume has been only about 4,000 shares. So do note that this is a rather illiquid stock, which I'll be asking about later on. The stock's 52-week high is $1.84, and its 52-week low is 67 cents. After a spike today, the company now has a market cap of just under $40 million, and there are 29.3 million shares outstanding, which makes this a $1.34 stock with a 50 and a 200-day moving average at respectively $1.08 and $1.02, which means that the stock is now trading above both of those. I see 2 million options and warrants combined, as well as 1.3 million RSUs and DSUs again combined, with 5.3 million preferred shares on top of it all, resulting in 38 million fully diluted shares, meaning an increase of about 30% can be expected if all dilutive securities get exercised, which will then result in about a 23% ownership dilution if, and that's always a big if, but if those actually get exercised. And of course, this doesn't account for any potential future share issuances, which, although this is not your typical junior, still isn't impossible given that Dyna operates in what is a very capital intensive and a price sensitive business. Insiders here own 14% of the company on a fully diluted basis. That's the 5.3 million preferred shares that I told you about. But again, it's highly illiquid stock. So I'm hoping to find out who owns the rest and why they're not trading it later on in the conversation. Moving on, I'll be looking at the financial statement, the latest of which is actually a 10Q or a quarterly report, which shows us the numbers as of March 31st, 2025, which is when the asset side of the balance sheet held almost $11 million in current assets, 2.2 million of which was cash, 1.75 in account receivables, 1.3 million in gold and concentrate inventories, almost 2.6 million in a tax receivable from what I'm assuming is the Mexican government, and just over $3 million was registered as others, which note 5 of the 10Q tells me that it's stuff like warehouse inventory, advances to suppliers, and prepaid expenses. On the liability side of the balance sheet, the total amount sat at $30.7 million, with the majority of that, so 29.5 being current liabilities. The biggest chunk here was 12.3 million, current liabilities, followed by an $8.9 million note payable, which is actually something that we'll talk about. It represents the drawn portion of a $12.5 million revolving credit line that's provided by Ocean Partners. That's an important name for this whole story, which we'll also talk about. But the maturity has now been extended to May 31st, 2026, with variable interest rates, but about 10% according to prior filings. And hopefully more about this later on in the conversation as well. Account payables, they sat at about $5.5 million with no major long-term debt that I can see. Moving on to the P&L for the quarter, I'll actually start off with the operating expenses, which in total came in at about $11.9 million, so just under $12 million. Although this does include some non-cash accounting adjustments, essentially, such as depreciations, accretion, stock-based compensation, and stuff like that. When you remove those, the actual out-of-pocket cost is $11.4 million. And a large part of that, so about 64% of that, or $7.3 million, was the cost for operating the mine and the mill. 11% of that, of the total, was G&A, with camp and warehouse facilities combined with transportation costs making up the rest. Again, this is a revenue generating company though, so these costs sat, again, $13.7 million of revenue, all in all resulting in just over $500,000 of net income applicable to the common shareholders. That's important because of those preferred shares, again, something we'll touch upon. This is where I typically give you the two financial ratios that I like giving, one of them being the exploration to administration ratio, which compares the exploration spend to the G&A, as well as the marketing to drilling ratio. But for a change, we don't actually have to do that here because this company actually generates revenue and even earnings, as I said. So I could give you a PE ratio, which by annualizing the $540,000 of profit and assuming a $2.1 million net income for the whole year, that would give us a PE ratio of about 18. But this is mining, so annualizing things isn't always the smartest move, typically at least. So instead, I'd encourage you to go to the SEC website, download their 10Q, and look at their numbers for yourself and consider what ratios you might think work for this company. For me, though, this is enough accounting, at least for a couple of days maybe, but definitely for the next couple of hours, because again, we're going to Mexico. And specifically, we're going about 250 miles northwest of Mazatlan in western Mexico, again, which is the center of the Sierra Madre Occidental Zone. This is where Dyna owns and has operated the San Jose de Garcia mine for 9 years now. Again, it's what I'd call small-scale mining. It's 25.5 thousand ounces that were produced here in 2024 through the cut and fill method and then processed through a normal flotation mill for a concentrate that then gets trucked to I might struggle with these names, but I'll do my best. But Manzanillo, and it gets sold to, again, Ocean Partners. So the name comes back here under 100% offtake agreement. This year's prediction, though, is targeted for up to 30,000 ounces, which they actually did in the past. So that's something, well, hopefully more about that later on in the conversation. Their proven and probables are 253,000 ounces of almost 5 grams gold, and indicated resource is about 286,000 ounces of 6.7 grams, as well as almost 100,000 ounces in the inferred category of 4.4 grams per ton. But they do believe there's more upside potential, given that only 3 of the over 20 known veins on their package have been included in the numbers that I just told you about. So that's something we'll touch upon as well. And as you can see in here, already loads to discuss here today, which means that it's time for me to finally shut up and Rohan and Dave give you the word. And first of all, thank you for sitting down with me today.
Thanks, Antonio. Great to be here.
Yeah, thank you very much. It's great to be here.
Pleasure's all mine, but this is your first time on the CEO barbecue, which means that we'll do a smell test before the actual grilling here. And we'll start with the man now running the company, which happens to be you, Dave. Well, you, Rohan. I'm gonna mess up your name, your guys' names. I'm sure today, but tell me, who are you and why do you think you're the right man for the job?
Sure. Thanks, Antonio. And that's okay. Dave and I are good friends. We've known each other for a long time, so you can mess up our names. I'm Rohan. I've been in the mining industry for almost 25 years. I started off as a very early employee of what was Wheaton River that became Goldcorp. That's where Dave and I worked together in the past. I'm a CA, or now CPA, by training, and much of my career has either been in finance, operational finance, close to mining operations, M&A and strategy. I've spent most of that whole career in a lot of that in Latin America, including much of that in Mexico. And in fact, it's a bit full circle for me. Our first acquisitions under Wheaton River were just in a nearby mine called San Dimas in Teltita, which you're probably familiar with. So we're actually, not only did Dave and I spend time working together, but also our general manager, Luis Portugal, at the time back then was chief geologist of San Dimas, and he's now our general manager. As far as I guess both answering the question quickly of why me for the job, and then I guess I could turn it and say, why did I take the job? I think why me? I think I have a very well-rounded experience in mining, in sort of all aspects from corporate strategy, how to finance a mine. I've been involved in a number of actually almost a dozen startups, including stuff that we spun off out of Goldcorp and Wheaton River. and a few turnaround situations, and we'll talk about that's one of the aspects a little bit here, and that's why the company is improving and growing. And so I think, and then in addition, I speak fluent Spanish, and everyone that I've been bringing to the team, is fluent in Spanish, if they're not already obviously Mexican. But and then why did I take this position? I see the San Jose, the Garcia, deposit and mine, as being, really having the potential to be a real company builder. A lot of people may use terms, say world class. I think there's a lot of world class attributes here in the mine, which include, the address, where it is. There are some, similarities to the San Dimas, mine, and in terms of, some, in terms of the exploration potential in many ways. Obviously, it's a different grade and it's a different mine. But that's what's certainly, attracted me to the project, is exploration potential, and also, if I can speak for Luis and partly for Dave. And so I see this as being, although it's small and it has ability to grow, and I think it has quite a substantial ability to grow. I think importantly, this has the opportunity to really be the cornerstone asset of growing, another, mid-tier gold producer. And again, that's what I spent, my whole career being involved in. I like stuff that are small, but they're getting bigger. Ideally, very big. It probably wouldn't be another Gold Corp necessarily. That was a pretty unique experience, but I like to be, I like to be involved with things that are growing.
Well, to that point, Rowan, maybe you can talk to me a little bit more about that specifically, because although, Cerrado, for example, a company you work with as well, it comes closer to what you're doing right now. I think they produced over 50,000 ounces last year still. So it's twice as much as you did last year. And then Gold Corp, of course, it's in its heyday. I think it was a top 5, maybe in top 4 gold producers in the world. So how is operating within a large gold producer similar, and how is it different from operating something like Dyna, and being here at this point where you actually want to grow it and maybe get to a Cerrado or wherever you hope it's going to get? Talk to me more about that.
Sure. No, thanks. I mean, I think, growing from, anything that's small, and let's say, small, let's say in this context, let's just define that maybe as, 150,000 ounces, or less, and depending on, that may be one, or that may be up to, say, 3 assets. But I think, there's a skill set that's required in terms of, whether you want to call it a startup mentality, a growth mentality, a roll up your sleeves mentality. And so I guess, to me, that's, it requires a certain, generally speaking, culture in the company, and group of people that are able to do that. So again, I would, view myself and argue that, that I can be someone who's both, can look at a company and the issues that we face at the 50,000 foot level of what needs to be done strategically, how do you get from A to B, but also, roll up my sleeves and get right, into, whatever spreadsheets and things to manage, day-to-day business. And so, that's maybe what I would say is the cultural difference in terms of, smaller companies. Obviously, the larger you get, typically, the better access you'll have to capital, and likely, stronger balance sheet and so on. And that obviously affords, many, opportunities and choices that you may not have when you're smaller. So, certainly in growing, Wheaton River / Gold Corp, we had strong access to capital, based partly on the timing that it was at then 2000, started that company in 2001. And during the sort of super cycle, if you want to call it that. But other attributes as it grows, improving financing, financial condition, and access to capital, and that allows, for whether it's M&A or other investments and so on. So that's what I would say is, primarily the difference. I mean, we're still in the phase of optimizing and growing the company, and looking towards, additional, growing our access to capital.
What about your technical team? I suppose, Dave, this is where you can talk to me more about that. But have you and your technical team, the rest of your technical team, have you worked with and made money for shareholders in similar geological and geopolitical settings before as well?
Do you want me to take this one, Rohan? I think it's probably.
Oh, yeah, I thought he was directing it to you. Go ahead, Dave.
Yeah, no. As I said, just a quick background. I have over 40 years in the mining industry, predominantly in gold, working for majors and for the small end of town. And most of my operational career has been optimizing large and small scale things. But coincidentally, it's also been very, very heavily involved in business development, recognizing value within organizations, within projects and everything else. So when Rohan reached out to me to assist with San Jose Garcia, the first thing we did was secure a general manager that was used to these geological domains, because again they have enormous potential, but you actually have to have the right skill sets, understand the geology, and understand the mining method, the selective mining method to get the grades. I mean, one of the things about the San Jose field that initially attracted me was that I think it was, number one, from a corporate development point of view, a completely unrecognised asset. This is actually a mineral fields, and if you look back at the history of this area, they were mining extremely high grades in the 1910s, 11s, until before the Mexican Revolution essentially shut down this mineral field. It shut down not because of lack of grade or anything else, but just because of the water and lacking pumping and all the economic upheaval caused by the Mexican Revolution. So it was only in the late 70s that people actually came back to this area and started exploring it. You know, we have a mineralized belt 3.5 k's long by 4.5 k's. However, it has to be developed by the right things technically. And the critical part of that is understanding the geology, both to achieve mine plans, but also more importantly to unlock the value and resource and reserve upside that that's clearly here and that has been neglected in the past.
Lots to touch upon there, so hopefully we'll have the time to get into everything. You are currently on site, as far as I understand it. Dave, do you
Yes, no, I'm on site here. I'm working with the management team. We've got a complete sort of, if you like, from a general manager around, we've been upskilling our team here, having an approach of having, if you like, both a very, very strong processing team in place and, very importantly, geological and mining team in place. So a lot of the key people here, a lot of the leadership team are actually new to this project, not new to the style of geology, but new to the project. And we've certainly beefed up the level of skills. The same as well with the finance team as well, to help drive the cost down going forward. Something that was neglected here before. We see a lot of opportunities to improve the grade, the recoveries, and also our current cross regime, drive that lower.
We'll definitely get to those as well. But my point or my next question would have been, so you do have executives residing in country, actually. So, I mean, you have people who pull the strings actually residing in country. Is that right?
They're on site. I'm a firm believer you have to be on site with the people. So the way the structure goes, we have a mine general manager and then department heads underneath him for those key areas. They work at 2010 roster, but also we've included and recruited the next level down, very, very strong supervise, the guys day to day running the plant, the mine. There's a lot of strength there, a lot of bench strength.
And if I can just add to that, sorry, Antonio, we have a very small, executive team. That's as I mentioned, all the people that I've recruited into CFO, new director of finance at the corporate level, all are fluent in Spanish. And myself and that team, spend a lot of time in Mexico. I'm flying down for a week with Dave starting on Wednesday. And then other than Dave and one other person, I mean, the entire team, that's operating team is Mexican and in Mexico. And so, it goes back to kind of my earlier comment of, very much a belief of hands-on, approach in order to operate and supervise the operations.
We'll definitely be back to part of that as well, actually. I'm making notes as we speak, so I don't forget it. I think this is going to be a long conversation, by the way. But insiders are noted at 14% of the company ownership, and that's on a fully diluted basis. So you guys have those 5.3 million preferred shares that I mentioned at the beginning. But who is that? Who owns those 5.3 million shares?
Yeah, sure. So the 5.3 million preferred shares are owned by a small group of people, I think half a dozen or so, and they're really the same core people that have supported the company for a number of years. So maybe to answer your question, I'll back up 1 second and say that, this has been a very tightly held, company, still is today, and has basically been, structured and in many ways operated, but certainly structured from a shareholder point of view, almost as a private company. So although it's listed on the OTCQX, it's been financed, essentially, from day one, from more or less, call it friends and family of a small group of people close to, more or less, close or some connection to the original, founder and founding team of the company. So to clarify that, also I'll say, just under 15 people or so own 70% of the company. Two individuals on a fully diluted basis own, 50% of the company. And all those years, all the financing was done by, basically by way of private placement, not public offering. So even though this company, you mentioned it's been in operations for 9 years, but it's actually been, listed on the OTCQX for 17, and the company's been, corporate existence for well, in its current form, let's say for just, about 26 years when it started acquiring the concessions in 99, all throughout that whole time, and, exploration and then leading to, early stage, small scale production has all been financed from a very small group of people. So that gets back to the point I was going to say, that these preferred shares, of which there's a few different series, were really, put in place to, when this small pool of capital, or small pool of shareholders, let's say, had been sort of financing this company all along, in order to sort of get to the next level of financing at a certain point in the past. These preferred shares were offered as a way to further, entice the shareholders into some further investment to get through that stage of the company. So, I guess that's a long way of saying it's more or less the same, sort of top, 10 or 15 shareholders in the common basis are the same, a few of the same people that own on the preferreds, and a large portion of that, from a share count point of view, is our largest shareholder, which is a family office in Dallas.
But it's not current management. So what does current management own? Like, how many shares do you own, or how many shares does the rest of management own?
So the 14% current, insider level includes all our directors and officers, and so that includes our founder and chairman. To answer your question for myself, it's only 10,000 shares that I've purchased since joining, and the rest I'm earning in on, both on RSU or option basis. And that will, that number for a lot of the current management team, will be, similar or zero, in the sense that, this is, almost all a brand new team, or is a brand new team, all within the last, 3 to 9 months basis. So,
how do you incentivize that team? Maybe not from the perspective of operational performance. How do you align that team with shareholders from here on out? I mean, are there any internal rules on their having to be buying in the open market, or how do you see that?
So that's a good question about, look, I certainly understand, appreciate your question, and I 100% believe in shareholder alignment, between management and shareholders. And I think in the case of, a number of management, that may not have, especially at the operational level, that may not have, the capital to be putting into the company, then, their alignment is through performance and earning into an equity, an equity exposure, which is, something that we have in place, for all, relevant, levels of, let's call it, senior levels of the company, operational and higher into executive. So, and I guess I would say that that's, largely true of, much of my experience in my career, as, I think a strong motivating factor is, earning in, whether it's a combination of earning in equity, whether it's a combination of, RSUs, performance share units, which have, performance, obviously have performance triggers in addition to, to earning in, and then obviously options, which have a, a unidirectional, share price appreciation
So what about yourself? Do you plan to be buying in the open market, or if they're financings, and we'll talk about that later on as well, but did you plan to be buying more shares or acquiring more shares in one way or another?
Yeah, no, I do plan to. I did buy the shares that I bought were in our last offering, which was in October. And as you can imagine, depending on, the things that are going on in the background, there's a lot of time. I mean, I guess, there's a lot of time that management is blacked out of, the ability to trade. Um, I mean, that's a factor one just has to manage around, but it does kind of tie in a little bit to your earlier question is, management, doesn't always have the same flexibility as, obviously as the wider shareholder group. But, for example, the technical report that we just issued a couple of weeks ago, which is very material news for the company, there was quite a period of time in there that, wouldn't have been able to trade on that information as it was evolving. So, but yes, the answer is yes, both on an open market basis and and on an offering basis. I plan to.
I want to go back to these 5.3 million preferred shares, though, because I think they do carry a 5% dividend to the people who owns those, so to the early investors. Is there an option for you to buy those back in order to lower the burden on your bottom line, or is there something to be done with those shares? And is that something you even want to be doing now?
Yeah, so I think it's 4%, but I'll double check on two of the two series there that you're referring to. The quick answer is yeah, they're accruing right now on a non-cash basis, where there is an election to be cash or shares at the election of the holder. Certainly, I'm in discussions with the holders in terms of I think two things. One is ideally be a conversation that we'd have around settling those accrued dividends in whichever manner makes the most sense for shareholders and for considering treasury concerns, looking at when's the right opportune time to potentially convert those into basic common shares if that makes sense overall. And so, for example, as you're aware, we are in the process of making a plan for an uplisting to a major exchange by the end of the year. There may be some aspects of that it makes more sense to have some of those converted prior to that. Although again, we don't have the actual means to call on them.
You're right. It is 4%. It's not 5%. I don't know why I've written down 5%, but I was just checking it as you were talking. I was just command Fing your latest thank you, and it is 4%. What about there's just a little bit of warrants in here. I believe some of those are 1 cent warrants. Who owns those? What happens to those?
Yeah, so I believe that the only warrants we have, I think, are the 1 cent warrants. They essentially came with one of the series of preferred shares, and I guess you would those were going back to my statement earlier, and I may be wrong. I think it was with the Series C issuance, and again there was in that particular instance, there was it was a key time for the company to raise a certain amount of funding, approximately 5 million, I think at the time, to further open up one of the early deposits and mines and start getting the mill up and running. And so to entice the shareholder to put in the financing at that time, essentially you could view it as a common share plus warrant, but essentially a free riding warrant at the time. That's another instrument there that we're looking to see if it makes sense to try to clean up, let's say before an uplisting, and make the capital structure a little tighter and cleaner.
Yeah, that would be it'd be interesting to see, especially again considering that there are 1 cent warrants here. That's why I really wanted to ask you about it. But what about royalties? What's the royalty situation on the mine and the land package? Anything there?
Yeah, nope. There's zero royalties. So to any on any aspect at all. So we're royalty free.
Let's talk a little bit about incentives here. I mentioned it just now, but I'm thinking about now how you incentivize people operationally. It's interesting to me how you're going to incentivize the current management team. Again, particularly interesting in this case because with juniors, And when I say juniors, I really mean explorers, not junior producers. Mm-hmm. But when I interview explorers or developers, it can be tied to market cap or to a discovery if it's a pre-discovery company or something like that. But what does that look like for yourself? How is executive compensation structured and determined? What are your KPIs tied to?
Sure, thanks. Yeah, I mean, our KPIs certainly this year were tied to a few, major milestones, including, one being the technical report that we just issued. Obviously being a critical first step to, I mean, first of all, being able to, sort of finally talk to any possible institutional shareholders or other, let's call them sophisticated, or more institutional-like type investors, and then obviously the core underpinning that we need for in order to begin an uplisting process. So that was one milestone, for example. Another milestone, other KPIs are clearly, our key KPIs in our, in our operational budget that we've I guess disclosed to the market at a very high level, but being our our production target, our cash flow, or our all-in sustaining cost target of 1850 to 2050, our exploration target in terms of budget and meters, which I'm sure we'll get into here in a bit, and then our other financial metrics. So that would be on the operational and financial side, and then another core milestone that we'll be judged on for sure is our ability to deliver on uplisting to a major stock exchange by the end of the year.
And that's a base salary and a bonus then in that case.
Yeah, I guess I would say that's how the company, absolutely, that's how the compensation committee will evaluate any bonus criteria for management will be on a short-term incentive basis. That would be the short term. Longer term incentives will be tied both to operation or exploration success, I should say, on a multi-year basis. And then obviously just multi-year success of the company overall.
Exploration, always interesting to me. It's definitely something we'll get to here in a second. I want to talk more specifically about Dyna here, though. I think I'm more or less through with my smell test, the way I call it, before the actual grilling. But it seems like I think you'll be able to generate free cash flow, although again, anything can happen. This forward-looking, basically just me guessing here, but it seems like you'll make some money this year. And you have now for a while. You said you run, or the company was run a bit of like as a private company, but you're still public. Why? Why are you still? Well, why not try to take the company private at this point if you're going to be making money, and if it's already kind of owned, or the majority is owned by a small group of people? Why not take it private?
Sure. Look, I can't speak for I can't speak on behalf of other shareholders and what all their goals and objectives might be. I guess there'd be one quick answer to that question would just be our largest shareholders. I think this is an important holding, but not a core holding. They're not mining focused investors generally. If you take that whole pool of original, let's call it friends and family, a lot of them were likely related to some way to the resource industry, given the company started in Dallas, and Katie Diepholz was originally in the oil and gas business. So certainly is a group of shareholders that are familiar with the resource business. But yeah, I would say number one, it's not necessarily core holding to a number of our largest shareholders. I think the nature of the deposit, that's still going to take some additional pretty strong investment in exploration in that to build out the actual ounces in the ground story, and increase to a reasonable size, further increase production, which we're sort of targeting in the kind of medium term of 50,000 ounce per year run rate. That still takes additional investment. So I guess I see it as being, and in my discussions with some of the largest shareholders, that that it has the attributes for to have a stronger sort of growth story in from a call it a capital growth story, both in terms of exploration, both in terms of the potential to be, cornerstone in an additional M&A, and the income, to take something private. I guess here's one other answer. Take something private, again, it's still a pretty good chunk of capital, even at a, potentially undervalued basis here. It's still, a pretty large amount of capital to take it private. And at the and I think if I was sitting in their position, I'd probably want to see a little more exploration and ounces on the books before I were to do that. So as much as there's some good arguments for doing so now, while the company is still relatively unknown and relatively thinly traded. I think there's a few more parameters that be, in place, before someone, might say, this makes definitely sense as a cash flow income play, after spending the money to take it private.
But so that growth, and we'll definitely talk about that as well. But that growth, do you think is going to be underpinned by equity raises, or do you think it's going to be a combination of debt and equity? How do you plan to finance that growth?
Sure. Look, I think a good portion of that will be, financed through organic, through operational cash flow. As far as, what combination, beyond that depends on our rate of investment, rate of exploration. Right now we have a pretty modest budget for this year of 2.5 to 3 million in exploration. I can see that easily doubling, and still being able to manage that exploration program and possibly even, possibly even tripling from that. But so again, it depends on, on the rate of exploration spend. And then that has a follow on impact on, whether we're going to make a mill expansion or not, the kind of investment needed to do that. But, starts with exploration, moves to sort of development and definition, and then moves to, other capital items if we're going to, sort of, reach for those growth items. So, obviously looking to, cash flow is a, as a first and foremost. Number two, I guess I'd look for a balanced combination of debt and equity. Right now we do have debt on the balance sheet, as you mentioned, to Ocean Partners, and it's a little, it's definitely weighted to the short term. We'd like to be able to, if not, if not refinance it, at least restructure it, and take a little pressure off both the working capital and on and on cash flow. So it's a little too heavy against cash flow as essentially a current liability. But if that were, if that's restructured, then I'd argue there's still a fair bit of room for increasing debt in a responsible way, and then the balance would be met through equity.
What's the current rate that you're paying on that debt?
It's SOFR plus 7.5.
So what has that been so far?
Oh, that's about 13% or something, like that.
Okay. What would restructuring look like? Like, what are you hoping for?
Oh, look, in the ideal world, it would be 4-year money in a term loan with something like a 6+ month, holiday up front if it was refinanced to a new party, and just take a little pressure off the cash flow statement in the short term.
Maybe you can talk to me a little bit more about your relationship with Ocean Partners here, though, because they own some of your equity. You've got that 100% offtake agreement with them, and then also there's the debt. So it's your debt, it's your sales, and your stock that they're involved in. So what's the relationship there, really?
Sure. Yeah. So look, I've known the founding guys of Ocean Partners for many years. First started doing some work with them when we built Peñasquito at Goldcorp, and they helped set up our concentrate sales department. But yeah, they started getting involved in DynaResource certainly before my time. They started getting involved in 2021. Initially just as buying the offtake, concentrate offtake. Then subsequently, they started getting involved in, providing a little bit of, trade finance or, credit capital, in terms of, both cash flow management, working capital, and some initial investments that expanded, over a couple year period. There were some funds that were used to expand in terms of some expansions into underground development. And then the Ocean Partners first started to put in equity in $5 million of equity in 2023. What I would point out, knowing Ocean Partners pretty well, is that this is one of the only companies that they've put in direct equity into, which I think is a strong, statement and signal about their confidence in this asset. In other companies that you will see that where they have equity, in virtually all the cases, they had debt, in some company that went sideways, and they basically called their debt into equity. And so they put in 5 million, and then since I've joined, they've put in another 2.5 million of equity approximately. Again, I think a strong signal about the company, and then in all of those, I guess, increasing interests. The CEO of Ocean Partners, Brent Omlin, he joined the board in February of last year. And so to summarize, they have, an offtake interest, a debt holder interest, a shareholder interest, and also have a representation on the board.
Well, how do you manage that concentration risk there? Maybe even potential risk for conflicts of interest. And are there any internal safeguards in place to protect other shareholders here, essentially?
Sure. I mean, look, first of all, I guess I would answer it by saying that, my own assessment, since joining and in my relationship with dealing with Ocean Partners, is that, the terms that we have are, on all those various instruments are market, meaning, our offtake agreement is market, our credit agreement is, is very similar to what you'd see in most other, trade finance to a company, from a similar party to a similar company like ours in our situation. As far as I guess, governance controls and so on, clearly, Brent being the representative, I mean, he wouldn't be voting on, or even part of discussions on, items that are, key to an Ocean Partner interest, relative to DynaResource. So, and I think that's pretty standard policy for hopefully any company. And so that's I guess that would be my answer to your controls. What I would also say is they've been a very supportive partner throughout this process. I think that's most evidenced by putting in equity capital, which again is not really part of their core business model, and the fact that they've continued to do so over the past 2 years, and may even be willing to do so again in the future, I think is a strong, a strong signal to, their willingness to work with us as a party. And look, we'll continue to, be vigilant about areas that whether it's in, an area that Dave's looking into, whether it's in the concentrate, sort of, assaying and warehousing aspect in the sales side, where we wanted to see some changes, and they've been responsive to doing that, and to something that benefits really on the DynaResource side. So yeah, I've that's not to say we should always be always looking out for how to optimize any contract. All I would say is, I think they've been, extremely good and fair parties to work with.
What is that contract, the offtake agreement? What does that look like? Is it floors and ceilings with the market element to it, or how does that work?
No, it's pretty. I mean, it looks pretty standard to other gold, concentrate contracts. So in terms of, I guess your floor ceiling, yeah, there's depending on the grade of our concentrate, there's a tiered grade of payability factor. And basically, we're, if we hit our grade targets of 45 grams a ton or more in our con, we're basically around just under 94.5% payability in concentrate. So, which, again, in assessing that with other, independent, consulting marketers, is competitive for, the kind of type of, multi-year, contract that we have. And then, there's some, modest treatment charges as well.
I wonder how that concentrate grade might change now that you're investing a little bit in infrastructure as well. So I'm hoping we'll get to talk about that. That's maybe Dave's portion as well. To your note, though, of being listed on another exchange, because I did want to ask you about liquidity. How do you fix it here? Because it's not, I mean, the stock is not liquid at all. Do you want to fix it? It sounded to me like you do, because you said you might be looking to list on a different exchange. What are you thinking? TSX, NASDAQ? Would it be the main board on the TSX? What would you think you'd be, what would be possible for you?
Sure, thanks. Yeah, I mean, our main thinking is that it would likely be, a U.S. big board, and there's a lot of similarities between, say, NYSE American.
So like NASDAQ, when you say big board, something like that.
Yeah, NASDAQ most likely.
Okay.
And then, but still evaluating in terms of in Canada, and I think for this, for our kind of positioning, I think the difference between TSXV and TSX are probably not that large. So I think all of those exchanges would be significant improvement in terms of access to access to shareholders, and also for and access to capital for the company, but also for shareholders to be able to access a significantly more diverse and liquid secondary market. The Sorry, the other part of your question was?
Well, what board you're thinking of listing
Sure.
on, what requirements you have to complete if you're thinking, I mean, timeline, you said this year, so is it Q3, Q4? When do you think that's going to happen?
Yeah. Yeah, I think it would be, I mean, late Q3 would be the earliest, so it is probably Q4. It's probably October, let's say, or maybe rolling into November. I mean, it's normally, for a company like ours that's already listed and registered with the SEC, I'd say it's typically, a 4 to 6 month process, and so we'd probably fit sort of right in between there, in general. Now with having a current technical report, we are essentially fully up to date on all disclosures, so we should meet the listing criteria of essentially any exchange. Now, as far as liquidity, sorry, that was the other part of your question, was liquidity in the short term. How do we fix it? I mean, I've certainly, this company's been essentially flying under the radar, for all the reasons we've discussed, and having been, in many ways, structured like a private company. And so when I'm not focusing on operations, and with Dave having joined full time in January, that's allowed me more time to get out and tell the story more. I think I know that there's, we're only barely touching the tip of the iceberg here in terms of getting the story out, and thanks to you, Antonio. There's one other channel, but it's still extremely unknown story. I mean, I imagine it was a relatively new story to you. I can say that I've been in the mining business 25 years, and 99 out of 100 people that I have told the story to, or mentioned where I was working, had never heard of it, and that's in the mining industry. So, it's again, for all the reasons of being financed by a very small group of people, it's been very unknown for so long. So that's it's extremely important to get out and get the story out in as many different environments that we can. So we certainly started to do that work, and we'll be essentially, I would say, ramping that up, and especially now, again, with the new information of the tech report, but also in anticipation of uplisting, to the extent we can, unless there's any prescribed quiet periods. We are, that's our goal, is to get this story out as much as possible. I think we've seen a small increase if you certainly look at liquidity, in the past, 3 to 6 months. I think that we've, this initial news and some of the, getting the story out has had an impact. But yeah, we have a long way to go. But it's pretty challenging. And again, it goes back to the need to be on a larger exchange. The vast majority of our shareholders actually still hold their shares in certificate form, not even in street form. And so that's a good indication to why trading is low. Plus also, yeah, people have been holders for a long time, very strong supporters of the company and patient. So there just there hasn't been a lot of a lot of shares to buy, but of course it goes in the opposite direction too, right? With low liquidity comes, if there's any particular seller for a particular reason, then that can have an impact on the stock, which is what you see if you look at the chart for the late Q3 and Q4 of last year.
Also, I mean, despite the recent jump in gold prices, your year-on-year performance is negative, right? You're down 21% over the last 52 weeks. Who's selling? I mean, because you said if there's one particular seller, is it one of the particular founders or whatever? Who's selling?
Yeah, no, it's not any of the founders for sure. I mean, most of the selling that has been, on the larger scale to make a difference, which again, I think is, if you look back, a good chunk of that was in, I think around August and September. Initially, it's mostly people who are, have some, need or requirement for sale. I can tell you one of them was an estate sale. And so, somebody's executor obviously doesn't really have a strong regard for how a particular investment is or is not performing. And that's something we're certainly trying to manage better. When I first joined, I didn't know our shareholder base as well. And so that's certainly something that we're trying to manage better now in terms of if there are potential sellers, is there an opportunity to help try to find someone else on the other side of the equation.
Why only just now? Like, why start this process now that the company has been in existence for 26 years? You said why are you thinking about uplisting now, and why didn't it happen earlier?
So again, I've only been with the company exactly 1 year, and I was hired for exactly the reason to essentially grow both the asset and grow the company. And I guess it was, if I can speak for the people who, the people on the board and the company that were part of bringing me in, is, that's so the why now is exactly why I am here, in order to do it. Why not in the past? I guess part of the answer is, it was working when this company first started operating on a very small basis. It was going back into a mine that really hadn't been mined almost virtually, since, as Dave mentioned, the Mexican Revolution, with a little bit of commercial mining around the 60s, and then some very small scale mining. When we first went in, grades were, much above reserve grade. And so, essentially, if you look, there's a trend of, increasing, throughput and, an increasing mine and mill throughput in order to, react to the fact that, grades were coming down to what is essentially long-term reserve grade is just under 5 grams a ton in our recent tech report. And so I guess my point is, in the initial years, it was a smaller operation, but higher grades. And now we're, running at, what we think is the long-term, or we're actually running just below right now, long-term reserve grade. And we're working hard to get those grades back up. And so, there was a period of time when all of those factors came together, the mill expansion and so on, where our operations really weren't fully optimized. And so that's been our first focus, has been to work on optimizing both mine and mill, and then do what we're starting to do now, which is look at growing the actual corporate side of the business in terms of capital structure and stock exchange.
What is the what is the long term or the midterm here that you're referencing to business plan? I mean, what's the specific strategy here for you? Grow it and sell it, or become a sustain a mid-tier production operation, or how do you see it going down? And again, if you can talk to me in
Sure.
timeframes, that would also be appreciated.
Sure, thanks. Look, I mean, look, obviously the main business plan is to increase shareholder value, as quickly and as much as possible. We believe strongly that, optimizing and improving the operations, is the best way to add value both to, cash flow and therefore, multiples and ratings in that re-rating, but also to add value to whatever ounces we have in the ground and ounces that we hope to grow. So that's our first core strategy. In terms of where we see that operational strategy being able to go as a standalone company. I think that within a time frame of 2 to 3 years, hopefully less than two, that we can be a path towards to approximately, say, 50,000 ounces a year by growing three things: growing recoveries, which we're implementing in the next 2 months to, say, increase recoveries by 5 to 10%, increase grades, which we think we can be increasing grades 10+% based on what our longer term mine plans, and block models show. And then ultimately, if all of that comes together and we have sufficient, exploration and development, then make a decision to increase mill throughput to, say, something like 1,100 to 1,200 tons a day. So that's sort of in the 2 to 3 year time frame. So 2 to 3 years, I'd like to see a 50,000 ounce a year mine with 1 to 1.5 million ounces in the ground. I think if we head along that path, somewhere along that line, there'll be a decision to be made, most likely, which will be either to accept a strong offer in terms of if there's an offer to purchase the company, or to use our hopefully increasing currency, share price, and currency to acquire and start to build towards that mid-tier producer. But in, say, in that 3+ year time frame, call it 3 to 5, even, if we're still an independent company, not, then I'd like to be building this into a mid-tier producer that has 150 to 200,000 ounces plus per year production over 2 to 3 operating assets with at least one development asset that's in the pipeline. That would be sort of I mean, there's our path in the middle of what we can do on our own, and somewhere along there, there may be I'd see an opportunity to buy or to be bought.
Well, now actually be a good time to dive into some of the specifics of that and how you want to do that. But maybe you can start me off with a simple items list, if you will, or a bullet point overview of what's going to happen over the short run that would put you in a position to work toward that larger business plan, kind of over the next, let's call it 2 quarters, until the end of this year. What happens?
Sure. Well, why don't I mean, if you want, you're referring to operational or corporate or both?
Yes. Let's start with operations.
Yeah, sure. With operations, maybe I'll ask Dave to kind of highlight some of those key items we just discussed in terms of recovery, grade, and other optimizations. Dave.
Yeah, no, I think simply trying to keep it down to is operational consistency. The operational team know that the targets are 800 tons a day, 80% recovery, 4 grams. And to get that 80% recovery, we have purchased and will be reinstalling a gravity circuit in San Jose. Mm-hmm. The mineralization is characterized here by a lot of free gold. Up to 35 to 40% of the gold is actually free. From the test work that we have done, is that on the existing plant, it hasn't been recovering that free gold as fully as it should. And we've purchased 3 Falcon gravity concentrators. We actually have a Falcon gravity concentrating on our tails grade, which it has on occasions when we hit these pockets of free gold, anything up to 180, 200 grams per ton is produced. That's on the tails grade. In other words, if that Falcon wasn't there, it wouldn't have been recovered. So the 3 Falcons are being crated, and they'll be transported in the next 2 weeks, and then will be installed with fully commissioned by the end of July, and that will get our recovery up from the 75 to the 80%. So as we trend towards the end of the year, as I keep iterating to the team, 800 tonnes a day, 4 grams of gold average, if not higher, and 80% recovery. So that's the expectations by the end of the year, operationally.
To the point maybe of wanting to grow production here this year as well, Q1 of 2025 saw just under 5.8 thousand ounces. I was going to say million ounces, and maybe you're hoping for that as well one day, but 5.8 thousand ounces produced, which is about a 17% decline from the same quarter last year, despite higher throughput. What gives?
Okay, the simple explanation is when we came on board here, as on January, if you look at the actual development, and underground mining hinges on underground development, you've got to get the development ahead to start to open up the ore faces, have a number of stopes in production. Due to the difficulties they had in 23-24, the underground development was virtually non-existent. For example, the average monthly development in 2024 was only 400 metres. In our April, we actually achieved 1,600 metres of underground development, 4 times of what was doing an underground mine's hands-on development. At the start of the year, we really only had 8 working areas. Currently, we've got 22 plus working areas, including all from underground development. So it was really, if you like, remiss in the previous development to get ahead. So we've caught up on that, and expectations moving forward is we'll keep that underground development up and giving us a number of working areas. I'd like to see an average of 25 different working areas, which gives you flexibility in ore blending, keeping the grade constant, and helping to the mine to mill and recoveries. It was really, if you like, I hate to use the word undercapitalised when the new operational team come on board, but very, very quickly. To that effort, we actually brought in a special underground contractor just to focus on the underground development.
So where does that leave you on where does that leave your target on for the 30,000 ounces this year? Again, because it was a bit lower, do you still think you're going to get it?
Yeah, there were still expectations at this stage with the grades and stopes that we're having, as per our forecast, sort of on the gold production.
And you touched upon this. Maybe you can talk to me more about it as well. But your head grade seems to have dropped here, almost 0.7 grams when you scaled the mill throughput. How manageable is that for the rest of the year? Like,
last year, I think the average grade was about 4 grams. The first quarter, the grade was around about 3.6 grams per tonne, and so far now we're trending back up to the 4 grams. So.
Okay, so how manageable is keeping it around that level? That level.
As I said, because we've caught up on our development, it gives us the flexibility with the number of working areas we have. And I know I've just come back from underground, and we've got a number of good working areas. Of course, cut and fill goes into cycles, as I said. You're pulling from one stope while you're filling another stope, and then developing another stope. But no, because we've caught up in our development, this is again particularly in April, where maintaining budget now as far as our underground development, so I don't anticipate too many surprises moving forward.
When we talk about surprises, power could be part of it too. I saw that power outages slowed you down in Q4 of last year. Is that a seasonal thing, and could it happen again this year?
One of the things we've built in is we're building resiliency here. So plan A, plan B, Cs. So we actually do have a 1.5 megawatt power station diesel here on site, and currently there's a rental unit as well to back up. Yes, coming the wet season, we do anticipate to have outages on that power line. However, we do have backup diesel facilities here on site. Of course, you don't want to use it. You want to have mains power because it's a lot cheaper than diesel generator. But again, to produce the gold, we do actually have the backup in power generation on site.
Yeah, well, welcome to mining, where maybe the alphabet is too short for an alternative plan. You go to plan Z, and then you got to do plan B1 or BB1. What is is there a CO2 penalty or something like that for those diesel generator? Or how much does running them generally add to the cost?
I'll get Rohan to answer that one, but our diesel cost is about $1.32 a litre. It's actually quite competitive on a world basis, and it probably adds about, I think, $5 a tonne if we run 100% of the diesel thing onto it in a month. I think in that sort of range.
Okay.
The milling costs are around about, we're trying to get to around about the $23 per tonne milling. So I think if you ran on the full diesel, we'd be looking at about the $28. But the power line has been very well cleared. We inspected. We actually have a guy going out at least once a week to take the whole 60 k's up through the mountains and inspect the power lines for trees and outages on that. So it's one of the things for the trial. So obviously, their outages are usually less than sort of 6 hours at the longest.
Yeah, Rowan.
Oh no, I was just going to say the cost on a per kilowatt hour basis, as with many other places, would be about 3 times difference. Diesel versus electricity.
Doesn't do anything to your tax or any additional CO2 penalties, because I don't know if it's a situation like that in where you're at in Mexico, but I know it can be like that.
No, we don't have any. I'm not aware of any from my previous dealings in other parts of Mexico, but certainly other countries would have that for sure. But if it is in other parts of Mexico, I wasn't aware of that.
Okay. Falcon units, that's an interesting part of the story as well. 3 Falcon units, Dave, is what you guys have installed. What's the CAPEX and downtime for installing those? What does that look like?
All our CAPEX was about $350,000 for those 3 units to have them fully installed. The other thing with those Falcon, they're produced by Sepro, a well-known firm in North America. They also give us the ability, one of the future projects we're looking at is actually producing gold doré on site to reduce our cost, because again, we have a fairly long logistics tail to get the concentrate to pay, both from a cost point of view, but also the dollar per tonne basis to get there. Sepro also have an intensive cyanide leach, and there's the option of, in the future, of converting the gravity concentrate produced by those Falcons, put them directly into a cyanide leach. Again, the CAPEX of that's only $300,000 or $400,000, and produce gold doré on site. So it was all part of the plan together to reinstall, gravity circuit at San Jose, because again, it's amazing just how much of the gold is locked up in trash work. If you go back to our press release, the overall recovery, which again it's a laboratory scale, was over 90%. So again, you've got to scale things up industrial. So I think the 80% recovery is a touch conservative once we get the gravity circuit in place.
That's actually not too bad for CAPEX as far as mining goes, I guess. How long are they going to go you? What's the lifespan on these things?
Machine the size of a large washing machine. So, and it also comes with 2 years worth of fully insurance payers, replacement parts, etc. for that sort of stuff. So they're being well installed in both in large gold, copper projects and also gold specific projects. Some places have eventually got rid of their flotation circuit and just have all gravity circuits, but we're starting off with 3 on each of the mills direct feed. So
I know the new vibrating screen that it fixed some of the throughput issues, if I'm not mistaken, but it did also make me think about potential bottlenecks in production down the road. What do you think would be the next bottleneck, or something that you would have to solve if the installation of these things works?
No, there's no sort of really bottlenecks to solve. Again, we've got going right to the end of the whole circuit is we have a basically new tailings dam, and we're also in the process of permitting another tailings dam location as well. Thinking ahead, Rohan's aspiration, which has been driven to the team, is to start planning on getting to the 50,000 rates, and of course, again, sometimes permitting of some of the support infrastructure takes a long time, and we've already started the process of permitting another tailings dam. Well, studying and we'll start very shortly the permitting of a third location for a tailings dam. Then going back to the process plant, we've actually have a new crusher. We've put a deposit down and that'll be installed later in the year to increase the robustness of, if you like, the commutation circuit, which is the crushing and the screening thing with the new screen. So that makes that circuit a lot more robust and able to handle a lot more capacity. We're doing some work on the flotation cells, trying to optimize it. Just the usual things that mine operators do when things start to stabilize. They start to look for the 1% and 2% gains throughout the entire circuit. So that's what the team is looking at the moment.
If I can just jump in on top of Dave, sorry, you asked about bottlenecks and so on. Another way maybe to pose a question is, what is the maximum throughput capacity of our plant and operation. Right now the kind of nameplate capacity is the 800 tons a day, and that's what we're targeting, in our projections and in our budget. And we certainly have days where we've hit that or well above that, but our target is to get those consistent, averages, as Dave mentioned, at 800 tons a day. Having said that, when we've run over, we've run as high as, I believe, 950 tons, almost per day. Now, having said that, I don't think Dave can add on after I finish, but I don't think we believe that with this whole mill circuit and all that, we could consistently run, 950 or higher tons a day. But I think if we can target a little bit higher and a little bit higher, I think somewhere, maybe 850 is the right number, but or maybe it's even a little higher than that. But if we can run somewhere north of 800, maybe it's somewhere in the 850 to 900. And as long as we're raising that consistently, are checking all the different areas for maintenance and bottlenecks, then I think that's kind of the run rate that I think we can sort of strive for with the existing infrastructure. It's it's that next level, as I mentioned, say 1100 or 1200 tons a day. That would require additional infrastructure in pretty much all aspects, of the bottleneck. Again, all pieces of the really are kind of built to not be able to go too much beyond say 950, depending on which area. So that's where we need to do some additional investment. I don't think it would be, depending on what we chose, if we're sticking with the same sort of setup of mill circuit that we have now, or if we're changing a little, as Dave mentioned, based on our new information and knowledge from gravity circuit, then maybe that might be a bit different. But let's say a 30% mill increase is probably only in the kind of $5 million, plus minus, kind of capital range, maybe a little bit more. But those are decisions that we'll make when we get to with sufficient information, as I mentioned, about exploration and development.
I want to go back to Dave, what you said about the tailings actually here for a second, because I thought, could that be part of the potential bottleneck? You said they are not. What do you stack? Is it dry stacking, filtering, slurrying into a pond? What does that look like?
It's the classic, sort of Mexican sort of into a pond and drying, and then using that thing to stack it. So it's voluntarily within the Mexican standard operations and Mexican standards on tailings dams go.
So essentially, you're going to run out of place soon. Is that what it's come down to?
No, in essence, we've got about 3 years in front of us on an existing cell. We actually have environmental approval for a phase 4A, which we're working on at the moment. It's probably the only thing about it, it's a little negative. It's uphill, and there's other locations that are downhill, so we actually have to pump. So on the search for an additional tailings fund, there's an opportunity to save in operating costs. Again, you like to not use gravity and to save on energy and be a lot more energy efficiently. Also, the other location we're looking for is a lot more. As I said, it's in a previously mined area, so there's no environmental issues or anything else like that. It can easily be rehabbed. So it's got positive both from an environmental point of view and also from an operating cost view longer term.
So do you have to get a third-party review or something like that, or have it reviewed by
registration about registration of sort of if the first step is to determine the vegetation and environmental assessment required. If it's obviously been mined previously and the area's been sort of it's essentially a desert, then there's no environmental sort of hurdles to overjump from. Then you start the engineering associated with that. So. Mexico, as you appreciate, is a very well-established mining jurisdiction, and they actually encourage small-scale mining and the legislation around that. So, again, a very, very friendly environment.
So it's, what is it called? Profepa or something like that? PROFEPA.
Yeah, Profepa, yeah.
Yeah, so they've got to come up and review it for you, essentially.
Yeah.
Okay. Is it? What about the local community? How close are you to a local community? And why I'm asking here is because of water, right? Like, how sensitive is the issue of water specifically, given that it's a pond that you're stacking in?
Yeah. No. Backing to the community here, we're actually in the community of San Jose Garcia. Very, very strong community support. incredibly so. We have about 140 people here that depend on us for the job. Our laboratory and a number of other key areas are all local people. We're encouraging local employment. There's a number of, if you like, engineers that are actually surprising in the middle of the mountains. They've gone to universities throughout Mexico, and they're working with us and glad to be back in San Jose. So very, very strong community. We have an agreement for land use of 4,000 hectares with the community as well. So for a 20-year period, and again, can't speak highly enough of the support we get from the community. So that's pretty straightforward. As far as water goes, we just access, there's a fairly large river here. We have an agreement to pump water from that river. So we have essentially year-round water from that. So again, not an issue.
Yeah. Okay. Well, maybe we can talk a little bit about exploration here. In that case, it seems like looking at the PFS that you released, it seems like you're not in a rush to replace those ounces, but it'd be good if you could replace them sometime soon. So talk to me more about exploration. How much money are you spending on looking for more gold this year, and where exactly will you be looking for it?
I've got to disagree a little bit and say we are in a rush to replace things. We can't wait to get in there and start the drill rig turning. I mean, to me, that was the attraction of coming in and working with Rohan on this one, is just to try to unlock this potential here. I mean, when you look at some of the previous records of the old mines that were stopped in 1910, you just go, oh my God. And then the exploration previously wasn't focused towards underground targets. If you go back to the site, there was a sort of, a resource statement. It was open pit potential. I think that was in hindsight, probably an error in strategy, considering that immediately adjacent, and I mean immediately adjacent, like within 40 metres of our existing underground infrastructure, there's other targets. At the moment, we discovered it in our Tres Amigos ore body, 40 metres away, a new vein system, which we've called Victoria, that we're developing on and trying to understand it. And then in our main Montramera mine, again, there's a very well-known Pelos Chinos, which is a very well-known old ore body. We're just in the process of developing towards that. So we have a number of, if you like, vein-style targets immediately adjacent to our existing infrastructure. But then also outside of that, there's some very, very exciting targets, sort of bonanza-style type gold that could potentially, was mined previously. So can't wait for the drill rig to get in there and start drilling.
So what is it? Was it an operational decision, or why have they not been explored before you, or why has anyone else trying to explore them or get them off your hands while you were operating the mine? Or why now?
I think my understanding of this and going back to it is that, again, the exploration team were driven towards a large-scale open pit thing, and the underground, they had some really nice grades underground and was sort of neglected focus while the exploration team started to do sort of explore for the open pit, lower grade open pit potential, instead of actually trying to consolidate and understand the entire mineral fields. That's one of the disciplines we brought back into by having a technical report, was to compile all the data, including the historical exploration and the historical workings, what the production was, what they're like. Some of these workings had actually been surveyed and channel sampled, but it had never all been pulled together and consolidated into one document. I think that would probably lack in discipline, to be honest. And again, this was the attraction about this project. As Rohan said, no one actually knew about this in the mining industry. I certainly didn't. And, I've worked just across the border in San Dimas, a similar sort of system. So it was a sort of an asset that went underneath the radar. And part of that was that, again, they never put exploration discipline, exploration focus into the project. And just focused on trying to, bootstrap cash flow by, developing on specific veins instead of taking the holistic, big picture view of this mineral field.
How much money are you looking to spend on it again?
We had, I think, $2 million budgeted, I think, this year.
2 million?
$2.5
million. 2.5 million. How many meters does that get you in Mexico?
We had a quote about $90 a metre all in costs. So we're in the process of actually quoting that, and that's from underground, and most of the drilling we're in the process of planning is quite short holes. In all fairness, we do actually have an air-driven Tepita drill rig, which is very, very slow, which is capable of doing 100-metre diamond drill holes. Again, we need to to drill out about 300 meters. So we actually have been drilling, at a slow rate, drilling ahead of ourselves to try and get some of these targets on. But the really exciting thing is when we get a rig underground and start drilling, 200 to 300 meter holes on some of these targets.
That's
And
90
very
bucks,
quickly.
because when you say all in, is that assays and everything?
No, that's just the drilling cost. On top of
okay.
that, there'll be assays costs. So
Okay. So what is okay? So how many meters do you think you're going to get out of that $2.5 million?
probably about 1,500 meters is what we're planning on. So,
15,000.
yeah, 15,000.
I was going to say those are some very expensive assays that you're thinking.
Sorry, I left the zero out.
Yeah. How okay, so 15,000 meters in how many holes? Because you said 200 to 300 meters. Is that about the average of the hole that you're going to get?
Yeah, that's what the average hole. So you have to
Oh, okay. So there's going to be plenty of news in throughout. What about so the resource that you have right now that I went through earlier in the PFS, how much drilling did it take to have that out? Because what I'm thinking about, let me tell you why I'm asking it, so that maybe you can talk more to it, is drilling efficiency, like the 15,000 meters. What are you hoping to get out of it? What would you consider success?
Okay. What I'm really hoping for, and one of the sort of unusual things about the PFS was restart, there's essentially no inferred material. Mm-hmm. We took a very, very conservative view on that thing. So you need to have a number of drill holes close together to have them measured in any category. And we took the sort of decision to be conservative in inferred thing. So again, on defining mineralizing structures on a broad-based basis, I think we can significantly increase our inferred resources very, very rapidly. So I think as far as the drilling programs goes, I think that will be the first aim, is trying to step back out on a greater distance to try to define, these mineralized structures on a longer basis, and then start to do the infill drilling. So I think that's where the real gain for the shareholders and real gain for life of mine planning is, sort of stepping out quite considerably along these mineralizing structures and drilling it in. So,
yeah, and if I can just add to that, in terms of, well, for your first question about how much drilling, was in the report. I mean, all the drilling on site since being, in the call it the modern era, Pignoli started doing some exploration in 1992, is about 120,000 meters in total. Not all of those meters, would have made it into this tech report. Well, number one, we've been mining for 9 years, so there was, obviously a fair bit of work to go through and resurvey the mine and make sure that we're excluding, obviously material that has previously been mined, and checking any discrepancies and so on. But so I don't know what that number, what that net number would be, but it certainly would be far less than 120,000 meters. But probably certainly less than even 70 or 80, I would argue. But yeah, so our goals for, as Dave said, for near-term exploration, we think we can, accelerate and expand the deposit pretty quickly, especially on the inferred basis, mainly being that, there are likely near holes that are, that maybe it's not fair to call them infill drilling, but maybe almost a form of. But in terms of things that as Dave said, our definition of inferreds, and higher, grade of resources, missed a fair bit of, sort of data, or excluded, I should say, data. And so if we put some additional holes in, that should be able to give, adequate information on, obviously the new information, but also upgrade some of that prior information. So that should be able to, bring in resources, inferred in particular, but other resources. And then also, I think, in general, I would say, a strong target of ours, and Dave shares the philosophy, and is be, in any reserve replacement, is to be replacing reserves you mine in the air, and ideally a minimum of one additional year up until a point where, maybe that becomes difficult. And I would argue that in our case, given, the sort of, semi, virgin territory, nature of the territory in some sense, is that, that we ought to, be, in accelerating that kind of ounce development process, we should be able to minor reserves, add to your reserves, and add, X, call it, years of resources. I mean, I'll just put, say, one for more, or two, let's say, but such to the point that, within a relatively few years, I think we can be getting towards, we have a strong, 10 plus year mine life. Possibly all in the inferred category, depending on what, really depends on what the drilling and things look like. But, I think where I think we can see in relatively short order is a 10 to 15 year mine life. Of course, if we upgrade the throughput rate, as we hope will come to fruition, then maybe what seems like it's 15, comes back to 10, for example, if it's a 30% increase in throughput.
Yeah, I think I would be very disappointed if within a year or two's time frame that we couldn't add it and have a resource inventory of at least 500,000 ounces. I think that's pretty obvious when you look at these structures and our targets. So that's a target, and this one certainly, in the midterm, is having a resource inventory, as in all classifications, of 1 million ounces is not inconceivable within the sort of 3 to 5 year time frame.
How many ounces have come out of the ground there since you're operating?
On a payable basis, I think about 170,000. So I mean, recovered, I should say. So gross, 250,000.
Yeah, and historically, well over 1 million ounces of very, very high grade, over 15 grams as well.
So. Well, no, but I'm thinking about, again, efficiency of the drill bit. So 120,000 meters. You have now a little less than, I know you're not supposed to combine all the categories, but for just for the sake of the example, you have less than 650,000 ounces if you combine everything. And then historically, the 250 that's been produced, not recovered, but come out of the ground. So, I mean, 120,000 meters for less than 1 million ounces, essentially. Can you do it more efficiently? I mean, with the drill bit that you're going to be putting in now, what kind of efficiency would you be chasing?
To be honest, I haven't answered that question, but one of the things we are focusing on those shorter holes ahead of their structure from underground. Appreciate a lot of that drilling before those meters. A lot of those meters were an open pit type targets, so they were drilling a lot of meters for very little small intersections. So very, very inefficient. So. Try to target. I mean, the average width of these veins are between 1 and 3 meters. So you can see, and the efficiencies on meters versus what your intersections are, doing it from surface is very, very inefficient.
Yeah. Okay.
So I'm not fully understanding your metric, but I just know that, sort of taking surface rigs to try to drill these things, and instead of using the underground infrastructure and even specific underground development to get closer to the mineralized zones is the way to go. So again, that improves that efficiencies, as in meters of sections versus meters drilled.
Yeah, and again, this is kind of a little bit of a me metric, and you can call it a 75 IQ metric because that's the only one I'm capable of conceiving. But it's how many meters have you drilled versus how many ounces do you have in resource, essentially. Yeah. That's what I'm thinking about. What about permitting?
Just if I could answer, I think I hadn't really thought of it this way, but I know one can. I think our efficiency that we're estimating based on our own views is about twice, is double the efficiency of what it was in the past. So roughly, I think what we're estimating here is 10 ounces per meter, and in the past that was about 5 ounces per meter, roughly, using your numbers.
That's a direct question. That's fair. That's a good target to know, and hopefully keep yourself to. What about permitting? Do you have all the permits in place that you can go and drill, or what does that look like?
Yes, all.
Yeah. Okay. One drill rig, or what are you thinking?
Starting off initially with one, again for the underground development, and then it'll probably evolve to 2.
Okay.
Early next year.
What does that mean in terms of time efficiency? How quickly are you going to drill the 15,000 meters?
Hopefully turning it by essentially about June next year, have it all finished and have it wrapped up as a schedule at this stage.
Do you have to news release everything that comes out of the lab, given that you're a producer? So what would be, and again, you're not on the TSX or TSXV now, but once you go there, you'd have to, again, release what's considered material information How do you plan on releasing all the holes that you're going to drill in batches, or how do you see it happening?
I'll answer that first, and then Dave can add operational comments. But yeah, certainly. Well, number one, we'll certainly always take the advice of any counsel on what constitutes material information. You're right. As an ongoing operation, we certainly see variability, in grades all the time. So we're not out there press releasing, every time there's a small stope with the X grade and so on. But we certainly, we want to get out that information to our shareholders so they understand the bigger picture. I think what we would be looking to do would be, a periodic update on our overall exploration, program. Periodic being, hopefully, certainly more often than quarterly, which would be part of our regular quarterly reporting. But depending on the progress and turnaround time of labs and so on, that maybe it's every other month kind of reporting. And obviously, then if there is something that does make sense, can be interpreted as being material, whether it's some, I would say, to answer your question, surface drilling when we get to that stage later in the program, in area that's call it quasi more green fields, not quite green fields, but almost with a material data point or data points, that's likely something that should be press released earlier than underground information that really just kind of informs kind of the next stage of mining. So periodic, plus I call it very material or very obviously material information. We'd do it immediately.
When do you think we're going to see the first assays come out of the ground?
Later in Q3.
Later Q3. Okay, so this year still. That's good. Let me write that down. Let's maybe talk a little bit about operating in Mexico. I was thinking about the permits. We didn't say too long on it. You said permitted for everything, but operating a mine in Mexico during what seems to be turbulent times, and particularly because you've been in Sinaloa. Well, the company's been in Sinaloa for over 20 years now, so it's been through multiple different periods in the Mexican government and culturally as well. What's changed there recently over the last, let's say, 1 to 3 years, and how is it really to be operating a mine there now?
I'll jump in on that one first. So first of all, we've been operating without disruption, in Sinaloa for 9 years. We think operating in Mexico is, great. Part of the reason, again, Dave and I, certainly myself, I'll speak for myself, took this role, I think extremely highly of the Mexican, mining, ecosystem and framework. There's suppliers, there's people, there's education, certainly, a great place to do business. On the government side, it's already, we're definitely seeing improvements with Claudia Sheinbaum, President Claudia Sheinbaum, over the previous administration. It may be the same party, but there's definitely a shift in attitude towards mining. And I think, in what's, important and specific, I guess, to give examples is, there are, numerous, operations that are starting to receive, permits that weren't previously getting permitted. The government was sitting on permits for a long time. And those are starting to be, released and you're starting to see, a bit of an uptick in exploration, in Mexico in general. So quick answer is, I think Mexico is a great jurisdiction to do business. Has its challenges, in different ways, as do all countries, but very mining friendly and getting friendlier again. And so I think, compared to the previous 6 years in the prior administration, this is a new change and a step forward in mining in Mexico.
I would just add, in many jurisdictions around the world, you always see press releases saying that projects are delayed because they could not get skilled labour. We're very, very fortunate here with Mexico. We're a handheld, mining intensive operation, and we have a very, very highly skilled workforce with people lined up to work here. And then couple that with very, very strong community support, and it makes life a lot easier here. So certainly, I can't speak highly enough of it. The Mexican engineers we have here, we have engineers at all level from supervisor up, and then the skill levels of the miners is world class. So again, makes it a great jurisdiction to be an operator in.
So you're not feeling any of the pressure then in that case, because I suppose a lot of the headlines that I get to see tied to the Mexican government might not agree entirely with what you're saying. They're essentially saying that that there's going to be a much stricter stance on foreign miners and specifically permitting. But you're not feeling any of that pressure, or how do you see it?
No, I mean no, actually, I haven't seen that headline. As you know, let's say, as I'm sure you know, I mean, at least half the Mexican mining industry is foreign owned. I mean, there's several very large Mexican mining companies, public or at least semi-public mining companies, and then there's a number of private companies, but almost everything in between is mostly foreign. Much of that being Canadian mining companies. Frankly, Canadians are in general are very much welcomed into the business, into the business ecosystem in Mexico. So, I mean, I've heard different discussions of people saying this is going to be an era of some nationalization. I'm not really sure where people are getting those comments from. I don't think the Mexican government has any interest in owning and operating any mining assets, let alone the petroleum assets that they still own. The other concrete, I guess, information piece that has been out there, for some time is a supposed ban on open pit mining. Again, it wouldn't apply to us in any case, but that legislation that's on paper has never been enacted, and in my opinion, is really there as a bit of a negotiating stick for the government to use potentially on new projects. I mean, if there was truly a ban on open pit mining, then half the mines in Mexico wouldn't be operating today and contributing 8% GDP to the country or somewhere thereabouts. And so, I mean, the Mexican government in this new administration in the first month took what I think is sort of an unfortunate and step or negative step, in that they slightly increased the mining tax and the mining. Well, there's just two types of taxes. One's on profits and one's on income. And I think that was unfortunate, given that they didn't really attempt to kind of have a discussion with the mining industry in Mexico before making that choice. I think since then, a lot of things have changed, including the trade situation in North America. And I think the administration was becoming more favorable to mining even before that. And I think with the recent issues and things in international trade, the mining industry is only that much more important to the government from a revenue source and an overall growth in the economy. So I personally see it as very much sort of, I guess, a green light or supportive going forward.
How's security though? You operate in the state of Sinaloa. When you personally go there on site, how do you move? Do you have to have security when you go from the airport to site, or what's the security situation?
No, I mean, quickly, I mean, the main insecurity that's been occurring in Sinaloa in the past 6 months or so is being centered mostly around the city of Culiacan, which is the capital, and sort of in that nearby region. So quick answer is no, we don't have any special security in in any of our cases, mine or Dave, or anyone else's. And I feel safe. Again, I've operated in Mexico for many, many years. So, I don't think it is an issue, certainly not where we operate. We're prudent in, let's say, choices that we make. And for example, our concentrate, once we bring it down from the mountain, we ship it with one of the most reliable, armored truck services in Mexico.
Hmm. Dave, what about from your perspective? Again, you're
Well, I'm actually here on site sort of for 20 days a month and perfectly safe here. Again, the workforce and the community really, they like what we're doing here. Hopefully in the next 2 weeks, we'll be opening up a medical clinic here. The company has a doctor here that, treat a number of people, everything else. So there's a really good relationship. And I think when you've got the respect and, the trust of the community, then a lot of those security issues just disappear or not there. So.
Has your logistics chain ever been disrupted by any activity, albeit criminal or government, since the company's been operated? Because I think you produce concentrate, you send it down to the coast, if I'm not mistaken. Has that ever been disrupted?
No, nothing that. If anything, we're coming into the monsoonal weather season, so there probably will be some delays for a day or two, but we have, measures in place to keep the roads opening. So that's probably the only delay in the logistics things is just, the weather related, which is, you could say that occurs any part of the world at certain times of the year, but nothing major.
But so yeah, nothing major. That's kind of the point. That's what I was thinking. Like you don't it's never been like a blockade from the locals or
no. Well, again, once it comes down to the mountain, it's on the national highway system. So
no, we have never had a blockade.
Yeah. Okay. I think I've been through a lot of the stuff that I wanted to ask. I'm definitely missing some stuff, that's for sure. But I'm sure that people listening to this will be there to correct me and help me out potentially for our next interview if we end up doing that. What do you think I'm forgetting to ask you, though, gentlemen? What did you come here hoping to talk about that I failed to bring up?
Rohan or myself?
You can start, Dave.
Yeah, I think from one of the things, the perspective is the reason why I sort of got involved with this, and I do have choices, is the fact that, this really is it's been an undervalued asset for a long, long time for a number of reasons. And I can't emphasize that enough. Both one of the things that Rohan and I learned with working with Wheaton River is we do not take on geological risk. And if the ore body is there and the grades are there, then we can unlock value on that one. So certainly in a discussion on the geology, the exploration potential on the mineral field, I think is probably something that you missed. Because again, when you do this and you work long hours on operating, you want to see value being unlocked. I think that's number one, and number two is again just the caliber of the operating people we have on site. I can't speak highly of that. Sort of Rohan and I can influence things, certainly, but it's the general manager and his team that day to day that are working on making this place a better place and producing more gold. I think I give all kudos to them. So just to those 2 points, I want.
Yeah. Rohan,
sure. Yeah. No, thanks, Dave. Certainly. Yeah. I would echo the same for sure in terms of, reasons for joining. As I had mentioned earlier, I really strongly believe that this asset can be the cornerstone of building, another, really, really great company. There is a lot of untapped potential in the ounces, in reducing costs still, in opportunities of grade and recovery improvement that we've discussed. So, from my point of view, we have, at least touched on all the major areas. I guess I would just emphasize, I think we have a plan, to be increasing, shareholder value, increasing, market performance and so on, throughout this year and beyond. And, so I would just, encourage, which I know you do. We're not, not selling stock here, but encourage people to take a look, because I really, I think we have a plan that every time we've got a checklist of things that we're doing. As we check those off, our goal is to, earn, the credibility and trust of everyone in the market, yourself included, Antonio, and show that we can really build this unknown or hidden gem as we've, Dave and I have started to refer to it, that really, I think can really shine as an asset, and we're bringing it, optimizing it and bringing it closer there. So.
Well, I appreciate you walking me through all these things. And I understand you're here to tell that bullish story. And you said you want to go out there and do more marketing and talk more about it. That's maybe something that we could have touched upon as well, because I'm thinking, should you do you have to keep marketing this to investors? I mean, since I see you're doing a couple of interviews here and there, but why? What's the strategy behind specifically that marketing campaign, and why do you have to keep marketing given that again you're already cash flow positive?
Yeah, so I mean, I guess I mean, first, if a tree falls in a forest and no one's there, does anyone hear? I mean, I think that goes back to, whether, we need to be out there and getting people in to be able to hear the story. So, whatever actions we take, there's a receptive audience. It takes time to obviously to reach people. And so that's why we've started it now. As far as cash flow positive, we are cash flow positive on on an operational basis and making money in terms of earnings and on a 100% cash flow basis. We're still working through we still have debt repayment obligations and so on. So there's still some things we can improve on the balance sheet, which is what we're working on. And then, of course, if we want to accelerate our growth and, in exploration, as I mentioned, or production or any other, growth opportunities, then we'll need access to capital. And so, it's important to get that story out, which is what we're doing now early in order to be, we don't want to be, then going for the first time to the market, whether it was, let's just say, whether it's staying on this exchange or any other exchange, and then saying, we're looking for some public capital, but we haven't, no one's heard of the story. We're looking to lay that foundation, get people to have awareness, come to us with questions, sort of build on this story, with us and build awareness, we'll build awareness and bring you along on the story. And then when, if we're ready for a primary offering and the market's ready, then be able to execute.
What about, and again, as I mentioned just now, I understand you're here to present a bullish story and you're going to go out there and do that with your marketing, but nothing's really ever perfect, and definitely not a mining operation. There's challenges to everything. So what keeps you up at night? If you had a magic stick, you could wave it at something and make it go away. What would you wave it at?
I'll start there, I guess. I mean, Dave, if Dave has an operational issues, but yeah, so I'll start and I'll use a a non-operational issue matter. Is just we have a very large asset on the balance sheet that you alluded to slightly in the beginning because you were referring to our tax receivable in the current basis. But if you look at our foreign tax receivable, current and long term, it's almost $20 million. That's VAT receivable from the Mexican government, which is 100% collectible, and that obviously makes up a very large amount of our assets, and arguably either makes up a large portion of our market cap, or arguably based on your own view of our production, is or sorry, our NAV is not valued at all. But the real point is, we're working hard to collect it. The Mexican government had the Mexican government certainly, does what it can to make it hard for them to pay out, refunds that you're owed. I liken that to an insurance adjuster. That's their job, is to make it hard to collect on an insurance claim. In this case, this is really just ordinary course of business. We pay VAT on all our supplies, including our mining contractors. And we're export good and zero rated, so we don't collect VAT to be able to offset them. When I since joining, what we realized is, Mexican government's made it very hard, but the company could also do more in terms of, improving our tax filings and the way we do it. So we've been doing that in conjunction with, building a strong, finance team in Mexico, and in Canada, which is, it's taken 6 months, let's say, to build out the full team, improve our filings, and also, change some of the tax advisors that we've been working with. We have started to collect that VAT at a slow rate. So year to date, I think it's only been about $1 million, which obviously is insufficient. And within sort of 3 to 6 months, by the end of this year, we want to be collecting, getting close to collecting, what we put out on a monthly basis, let alone, collecting on that opening balance. So to me, that's when you say what keeps me up at night. That's a huge asset, sits on a balance sheet. Frankly, if that was being recovered on a timely basis, the company wouldn't need any debt, wouldn't need the 10 million that's on the balance sheet. And I think that's, both it's both a challenge that, as I said, risk and challenge that keeps me up, but it's also a huge opportunity that I think is not being valued at all in the market. And as soon as we fix that on a consistent basis and show that we fixed it, which we're getting much closer to, then I think not only will we, most importantly, be receiving that cash flow and assisting in financing the operations, but we will be, I think we'll start getting credit for it in the market.
Dave, what about yourself on the operational side? If you had a magic wand?
From the operational side of things, magic wand to fix a number of drill hole intercepts along the veins and the structures. Again, it's a real shame that we've got such a very low resource inventory at this stage. We've got a reserve inventory 7 years, and it's just an obvious opportunity. So if there's a magic wand to start the drilling program and get some of these intersections and start drilling along, and that, because again, that will unlock value very, very quickly to shareholders when you look at it, the relations and everything else. So again, we took a very, very conservative approach when we came to the resource and reserve thing. The things sometimes you have to do, but again, magic wand fixing it, that's one thing that, and that'll enable us to have a long-term planning horizon and more flexibility on some of the grades and everything else that we deliver. So, unlocking that resource potential very, very quickly in the near term, I think, is the thing that keeps me awake at night, but also one of our biggest opportunities.
Well, gentlemen, I really appreciate you sitting down with me. It'd be interesting to catch up maybe at a later date when there's some more updates later down the road. And again, I am sure it's almost midnight for me here, so I'm sure I'm missing some stuff. But I'm sure that people listening to this will correct me. And so to everyone listening and watching, please do let me know if I'm forgetting something. Send me an email, put it in the comments, whatever works. And I will ask it at a later date in a future interview. And gentlemen, thank you so much for sitting down with me today.
No, thank you.
Thanks a lot, Antonio. Appreciate the time, especially given your hour. Thanks a lot.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, Believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."